The CIMA MCS pre-scene for May-August 2026 is out. And if you are sitting this exam, this video is exactly where you need to start. We're talking about Carton, a global food and beverage packaging manufacturer with 27 factories, 23,000 employees, and $1.2 billion in revenue. They make the cartons your milk comes in and the tubs your ice cream sits in. But they also a consultancy business, and the dual model is the heart of every exam trigger in this sitting. Now, if this is your first CIMA case study, then welcome. MCS is also known as the gateway exam. So what are we going to cover in this video? We will kick off with Nisha, our expert MCS tutor, who will walk you through the Carton company background, who they are, how the two divisions work together, and the financials and what they really are telling us. Then we cover your role as a finance manager and the core competencies you'll be tested on. Of course, that will be based on the 2026 CIMA blueprint. After that, a clear breakdown of how the MCS exam is actually structured, and then we finish with two most cross-pillar exam topics you need to know. Acquisitions, which touches F2, P2, and E2 all at once, and performance management, where Carton's consultancy's head over tells a very specific story. 1 hour of free content. Grab a coffee, get your notes ready, and let's go!
Welcome to the Management Case Study pre-scene analysis for your May and August 2026 case study session. So the company, or the hypothetical company, may I say, is Carton Group, and we operate within the food packaging industry. Now, if you look at this document or the pre-scene you're given in your exam, you are simulating the role of a finance manager within Carton's head office based in Harlem, which we will discuss in the introduction. So you report to Elizabeth Menda, the senior finance manager. Now your answers need to reflect the fact that you're in the management level and you are a manager. So if you look at some of the colors, the labels you would see as we go through this document, you will notice green theory areas relating to P2, theory areas relating to F2 will be in blue, and theory areas relating to E2 will be in purple. Then, if something is in red, that means it's a critical pre-scene area, a high priority exam area. If you see something with a gold observation, with this mark, you could see that this is a deep analytical insight. So this will determine between passing the exam and getting a good pass. So basically, a good score to get a good mark. So you can pass the exam with 81 out of 150, or you can pass the exam with, we'll say, maybe even over 100 out of 150. That is considered a good score. So we of course want to work towards a good pass mark, because that will help you definitely get through the exam confidently. So these are critical areas we need to pay attention towards. Now remember, in your management case study, there is no calculations, but instead you need to interpret, you need to explain, you need to draft, you need to advise. So now let's jump in to the real meat of the pre-scene. So first let's talk about the introduction. So this is the introduction part of your pre-scene. So what is the company? What is your role? And what's the context in which you are operating within the company? So the pre-scene really establishes this for us. So the company is Cartn. They provide food packaging solutions. But of course, there are two divisions of the company. One is the manufacturing division that, of course, manufactures these food packaging solutions. And second is the consulting aspect, the aspect to consult how maybe food companies consult to set up their food packaging facilities for them. So the two revenue streams are very different if you look at it, right? One is a manufacturing aspect, one is a little bit of a service. So you need to understand how this difference will have an impact and how our service offering needs to offer certain quality aspects when it comes to consultancy. So, of course, the industry we serve is the food industry, including beverages. So, the key point here is our key customers, therefore. We don't serve end customers, rather, our customers are other businesses. So, when it comes to B2B customer relationships, quality becomes paramount because if we don't offer something of quality, that is going to affect them. They want clear contract terms, clear prices, discounts, and also we need to foster close relationships with them because they are likely to purchase. They're not buying one or two packages, they buy in bulk, and it's a continuous relationship. So basically, we offer packaging materials designed to meet the manufacturer's specific needs. So there is a little bit of tailoring in here, which is very important. So we need to tailor based on what they want, maybe the what should be in the packaging, etc. Additional services we support in design and installing the packaging facilities in their manufacturing facility. So it's basically a consultancy based aspect. So it's relating to, we take it on as a project. So therefore, different revenue aspects will also apply. Maybe different stages of revenue recognition will be applicable in comparison just to manufacturing. In terms of our scale as a company, Carton is one of the world's largest manufacturers. So that means we are a key global player. We probably are a key global player. Probably we have economies of scale, global operations. So we are not just a local company just based in Holland, but we are a multinational group. So aspects such as IAS 21 relating to currency, transfer pricing all become very applicable. When it comes to patents, we hold many patents for our innovative design features. So we are a company, therefore, we're not just sticking in, we're trying to stand out. We do have patents for the packaging we offer. So that would definitely be an IAS 38 application. Then location, Holland, the currency is the H dollar. Again, this probably is our functional currency. But what about our presentation currency, as we have many subsidiaries? So our functional currency and presentation currency right now is the H dollar. But if the presentation currency of some of our foreign operations, if our functional currency of our foreign operations may be different, we will have to change it to our presentation currency when we are preparing our financial statements. Holland company law requires us to prepare our financial statements in line with IFRS compliance. So this makes all the IFRS standards applicable to you. So your role is you're a finance manager. So you report to the senior finance manager, as well as probably in certain instances you might be having contact to the board level. But you alone will not set the strategy because you're still at the management level. So that's basically the basic aspects of the introduction. And of course, your reporting line, therefore, is also given. So if you look at this, the persona you need to write answers in your exam. So this is a goal aspect because it's very important. You need to write not as a student, but as a finance manager. So this is where we come to the part where applying aspects relating to the exam requires that you do not, you have to have some level of authority. You need to simulate that you are working within Carton. You are at Carton. You are an employee of Carton. So you want to not just give theory, parrot it out, but rather you want to make sure, as it says here, to anchor Carton's numbers, people, and strategy into your answer. Because that is what will show that you're actually an employee of Carton, right? If not, it will just become a theory, a parroting of some theory. So, from this introduction, we can definitely get a few F2 triggers, one relating to use of IFRS. Next, consolidation, because we are a multinational company. We're a group of companies. We have 27 factories globally. So they will be our subsidiaries. So we have to prepare consolidated financial statements. IAS 21 becomes very applicable to us on how we have to translate our foreign operations to our presentation currency, which is the H dollar, and your role as a finance manager in assisting with regards to financial reporting and management accounts. So with that established, now we have a basic introduction of the company. So now let's go through the company itself. So now let's look at the history of the company, the structure, the products, board of directors, as well as our business model. So first, let's look at the history and structure of Carton. So how did Carton come to be? So it was founded by engineers in 1960. So that means this is not a new company. This is a fairly established company if we were founded in 1960. So engineers-led origins explain Carton's emphasis on technical innovation and patents. So intellectual capital is a core to our identity. Then in 1978, plus 18 years, you have us becoming a listed company in the Harlem Stock Exchange. So once we became a listed company, a public company, now we are under the eye of the public, both in Harlem and whatever country we expand to. So we need to be accountable to our shareholders. We have dividend-related obligations, and we need to abide by corporate governance. Now, this we will talk about it when we talk about the board of director structure. Then in 1983, the founders sold remaining shares. So now there is a clear separation of 5 years post becoming a public company. As the initial engineers, the founders, they sell off their rights. You see a clear separation now between ownership and management. Carton is professionally managed, not founder control. Now, why is this important? Because this brings in the classic principal agent situation. The principal is separate and the agent managing the company is separate. So that makes corporate governance crucial, or corporate governance is important. So we'll talk about this towards the latter part of this video. Then if you look at present, we have 23,000 employees, 27 factories worldwide, 6 consultancy officers, one of the 6 largest carton tub manufacturers globally. So this is present day. So seems like we have done well, we have grown, we're a large company. Having 23,000 employees, just from an E2 perspective, means we have so much of human resources, operations aspect, 27 factories, 6 consultancy officers. We are one of the largest, one of the 6 largest carton tub manufacturers globally. This should really show you what a big company we are. So managing it is extremely crucial. Now, if we look at our manufacturing, a deep dive into our manufacturing, this is our primary revenue source. So basically, this is where we are manufacturing our cartons and tubs for other food manufacturers. So we have a B2B relationship, business to business. So it's very important that we prioritize cost, because no one wants to spend a very high price for cartons that are disposed or tubs. So we have to manage costs, at the same time quality, logistics, and our customer relationships. Absolutely vital areas to consider. If we look at our revenue by customer segment, our largest revenue generated by customers come from the dairy product and dairy products substitute customers with a 48% contribution. So when we are talking about this, we're talking about fresh milk cartons, those that have a shorter shelf life. We're talking about ultra high temperature cartons, which go through the process of to keep the integrity. They go through the process of heating them at very high temperatures, and they are sterilized. Then you have yogurt tubs, and you have alternate plant-based milk substitutes. So this is the largest and most complex segment. And remember, when it comes to dairy, you need to keep the cold chain integrity. Of course, this is not really what we do, because we are manufacturing the cartons, but we need to make sure that, for an example, our ultra high temperature cartons have used the aseptic process. That means this high heat process and sterilization process, to make sure there won't be any bacteria that will grow and there won't be any contamination. The next largest segment is fruit juices. So it's similar to the in terms of construction, it's similar to milk cartons. But remember, we are dealing with an acidic content. So it's very important. Remember the lining we discussed under the industry structure of the manufacturing of cartons. Yes, so we need to make sure the careful lining separates the juice between the aluminium. So the paper portion or the plastic portion separates it from the aluminium, because we cannot have quality issues, contamination. This will lead to liability on our end. Then the next customer segment is fresh and frozen food. So these are tubs. So we have ice cream tubs. So these can be paper or plastic. They are designed generally for low temperature stability. So for an example, an ice cream carton needs to be temperature resistant. It should be able to tackle very low temperatures. And of course, they come in standard sizes. So how do our products reach our customers? So when it comes to cartons, I think we discussed this even in the industry section. The cartons, we manufacture them in terms of rolls, laminated rolls, plus their plastic caps. Then customers have their production lines that fold and seal it using machinery. But we need to make sure we're manufacturing the roll well, based on the required standard, so that there won't be any issues. Tubs are, of course, already shaped with the lids given. We stack a number of tubs together so that efficient shipping is possible. But compared to cartons, tubs, we give the finished product. Now, customization is a key part of our process, and of course a very crucial part, because we're dealing with B2B, or we're dealing with businesses. So they are, at the end of the day, different food manufacturers who want to supply their product to the end customer. So they need specific design software. They need to be able to specify the graphics and text they want. So we allow this. So generally the customers will email their designs to us and their exact specifications, and we help them design it so that this can be included either in the carton or on the tub. The pattern of ordering tends to be frequent small orders. So we don't have our customers asking for large, infrequent orders. So it's done so that our manufacturers or our businesses we offer can maintain lower inventory. Standard sizes are 1 liter, 500 milliliters, and 0.2 liters for cartons. There can be larger cartons, but it's basically based on the customer needs. And some small cartons are supplied with straw. So this is an important part. We do supply certain small cartons with straws. Now, what's very important to identify is when it comes to cartons, we do not do the final assembly of the cartons. We supply the materials, and it's the client's machinery that does the folding and sealing. But this is where our consultancy comes into play, because we do have a role here. We must ensure, for an example, our laminated material is manufactured perfectly so that there won't be any fault. Because any defect will create downtimes to our customer's production line and can be costly to us as well. So this is where our consultancy wing comes into play. This is our secondary revenue stream. This is where we offer the needed help to set up their manufacturing process when it comes to packaging or coming up with the cartons. So what do we offer? So this is primarily a service. This is not, here we're not really offering any kind of, we're offering a service to design and install packaging equipment. We're not doing it for them. It's only advisory. It doesn't mean we are supplying or installing it, but we offer that advisory aspect, how to do it. I think we tie them up with certain recommended specific equipment manufacturers and models. So we are assisting them. And remember, this is a very different revenue avenue. Here we are talking about implications of IFRS 15. The performance obligation is satisfied over a period of time. This is a project-based work. In terms of the scale, we have 800 design and technical staff working in 6 offices worldwide, working in the consultancy wing. So they are obviously specialist workforce. They have specialist skills on how to set up the design systems, how to set up the packaging equipment, how to align it with our compatible equipment with our cartons. So important to retain this staff. It will not be easy to train new staff. It will not be easy to get new staff. So retaining the existing staff, making sure they're happy, is a key part of HR. Then client brief. So client brief is when we start working with the client. They give us a brief. They work with the design team. They talk about the product size, the type, the temperature, the packaging. And then our engineers design systems compatible with their production lines. So generally the brief is the start. So you will have the brief. So the brief is the start of the engagement until completion. So a brief will determine how we will cost our client. So the cost generally we currently follow is we take, based on the brief, we look at the time we will need for this project. We look at the seniority of engineers used. So if it's a fairly simple one, or for an example, if the client is not too specific, we might use maybe moderately senior engineers. But if it's a complex process, client wants precision, we might use senior engineers. So this will push the price up further. So it seems like we're using a time-based, or you would say a cost-plus pricing. But of course, given that we're offering a consultancy, something to consider is, could we move on to a more value-based pricing proposition? We don't really have to go to a cost-plus. We can go to a value-based, the perceived value of the service we offer. Now remember, if there's cost runs, if it's our fault, we bear it. But if it's the client's because of client delays or client not giving a correct briefing in the start, it becomes additional revenue for us, and it's recharged to the client. But remember, this is where risk management comes into play. For an example, if it's caused by us, we will have to bear that additional expense. It will erode profitability if it's our mistake. Then strategic value. So the strategic value of offering this consultancy, the question is, why should we offer it? Is it needed? Yes, because even though it has an aspect of a margin drag, consultancy clients often become our manufacturing customers. So there is a value addition that happens, and maybe that's why we just price it at a cost plus reason. We give them a good pricing, we satisfy them, they like our cartons, they like our tubs, they become our manufacturing customers. When we look at our financial section, you would see that this does have an impact on our overall margin compared to our closest competitor who doesn't offer this. But this probably is the reason we offer it, because it offers an ability to transition, to work with our clients, to establish a relationship, and to transition them to long-term manufacturing clients. So the benefit is we can work with clients, we can build relationships and trust, I would say, and convert them to long-term clients in the manufacturing angle. So I would think the consultancy service, the consultancy angle will come first, and then you will have the manufacturing. Or it can work together, but generally consultancy might be the first aspect when you are talking about the briefing, and ultimately they would become our manufacturing clients. So from an F2 perspective, you have IFRS 15, revenue recognition. So the steps involved in it. So that is for the service aspect. Of course, for the manufacturing contract, we will recognize the revenue at the point when control of the goods passes. We don't have to recognize the revenue in stages. And remember, if back again, if you're talking about the service, if we receive cash in advance, for an example, if the client pays us in advance, it's a liability, a contract liability until we can recognize it. Whereas if they don't, it becomes a contract asset. Because remember, when it comes to the consultancy base, we can recognize this income over time. So we have to choose how do we recognize it over time, not at a single point, recognize it based on completion of work, percentage of completion. Then from a P2 perspective, pricing comes into play for our consultancy. Should we choose a more value-based pricing? Relevant costing. So sometimes we might have capacity constraints, or we might have to decide if it makes sense to take on a particular client. Should we take on a particular consultancy engagement? So then we will need to use relevant costing principles, or even to decide what is more profitable, we might use contribution analysis. We would take the options that maximize the contribution per engineer hour. So we will obviously go for the most profitable work for us. Then from an E2 perspective, the whole consultancy wing is actually a project. So you have how to manage a project initiation documents, how to plan the project, NAT charts, CPA, how to interpret a CPA, how to form the team for the project, how to handle conflicts between the consultancy team that is handling a particular client engagement, how to manage scope. What do we know? What can we say is a part of the current scope, and what is considered an overrun of the scope, and we should charge it to our client. So a lot of key areas can come into play when we especially look at the consultancy wing. The consultancy wing as opposed to our manufacturing wing. So next we can move on to our board structure. Now if you look at our board structure, we have the CEO, Geekan Lee. So obviously handles the overall leadership and strategic direction of the company, which is important for such a big company as us. So that is excellent. So offers the group leadership and strategic direction. He makes decisions on major acquisitions. So I'm sure with the rest of the board, but basically the overall head of the company. Moving a bit downward, you have the CEO, the non-executive chair, Evelyn. So first aspect, good. We can say in terms of corporate governance, the role of CEO and chairman, or is it chairwoman? Chairwoman, or we'll say chair, is separate. So that is good. Generally, the role of CEO and chair should be separate, and that we can see in this instance. Then if you look at our operations director, we have Alison. She is in head of HR as well. So she looks at operational efficiency, labor relations, factory management, capacity planning, and all these aspects. Then you have Hytham Amer, the marketing director, looks at pricing decisions, new customer acquisition, marketing strategy. Then we have Wofi looking at product development, the director of product development, so more on research and development and sustainability. So all sustainability matters are probably handled by Wofi. Then we have Mario, this is your finance director. So Elizabeth, the senior finance manager, reports to Mario and you report to Elizabeth. Then you have, of course, the non-executive chair, and then you have the non-executive directors. There seems to be 3 non-executive directors. Most likely they oversee the different committees. Of course, we don't know. There's no direct mention of the committees in your pre-scene, but we can assume there may be. Now, if you look at the balance between executive and non-executive directors, there is 1, 2, 3, 4, 5 executive, and there is 4 with the chair. It should be without, but with the chair there is 4 executive directors. So I would say lack of balance between executive and non-executive directors can be observed here. It's questionable if we have the committees. We should, but not sure. The pre-scene doesn't clearly mention if we have the committees. If you look at the skills, the experience of the board and what they bring on, I would say the operations director and the HR director should be very different. We should have a global HR director. Operations director shouldn't be handling HR. Reason being, we have, I think, 23,000 employees. So we are a company with 23,000 HR or human resources. So we need a separate HR director. It's not something small. We need an entirely separate HR division within the company. Absolutely vital. We even need a director for legal affairs, I would say. We need a director for legal affairs, and that's because, again, we are a big company. We operate in different jurisdictions. So director of legal affairs is also quite important for a company like us. So these are certain aspects where our corporate governance can improve on. Overall, seems like we're having a balanced board, but the board can enhance itself in terms of these areas. So finally, we'll look at our business model in this video. So the business model is a very important area you need to understand and fully comprehend and remember. Not just understand, not just comprehend, but remember for your exam. You get a lot of questions. Your examiner loves to give you questions on the impact of something on your business model and for you to really evaluate that. So to be able to do that, you need to have a firm grounding on our business model. So first of all, how do we define value? According to the pre-seen, Carton defines value for its packaging customers. So we have both the packaging customers and the consultancy clients. So for the packaging customers, by supplying excellent products that enhance the perceived quality of food in retail settings. So if I was to highlight some of the key points, I would highlight excellent products, quality, enhance quality of food. So basically, quality is paramount. Quality of our products that enhance the final application of it. Then if you look at the consultancy, applying engineering expertise to recommend optimal packaging solutions. So optimal packaging. So a balance between expertise to recommend optimum packaging solutions to our clients. So again, offering value, offering expertise is what we are looking at. So I would say value and expertise. Then how do we create this value we define? We create this value through our expertise in manufacturing of packaging and the creation of packaging solutions. So we heavily invest in staff training and development so that customers and clients are provided with a consistent and a reliable service. So consistent and reliable service at the promised quality they want. On time at the promised quality. So we create this value through training. We offer manufacturing expertise. So we have our patents, our innovation. So we use this. We use our human resources and we offer them consistent, reliable delivery at a promised quality. Now we have created the value. How do we deliver this in a practical sense? We have our packaging factories and design consultancies in several countries. So operation in several countries globally is one way we deliver value. So we are accessible. So we remain accessible. And our packaging customers and packaging solution clients benefit from the company's ability to understand local conditions for the manufacture and sale of packaged food products. By establishing ourselves globally and local, I will say, adaptation. So by having local operations in these countries, we understand the local climate, the local terms, the local laws for food safety, and we tailor it to them. So we are able to clearly meet their needs. How do we capture residual value? How do we capture? This should be capturing residual value. How do we capture this residual value? So we benefit from the commercial success of our customers and consultancy clients. So basically, we benefit when our end customers do well. Meeting their needs boosts demand for packaging and for consultancy services. So it's like a cycle. They do well, we do well. If customers are happy with what they buy from them, they will have more demand, we will have more sales. So if food manufacturers grow, their packaging orders will also grow. So there is a synergy between the two main lines of business for us as well. So if we offer good consultancy services, we will have packaging clients who want our packaging. So we understand this link, and that's how we capture residual value, simply by understanding the link between customer happiness and demand for our products. Now, just understanding our business model at each stage is something you should be doing. I want you to spend time to understand each and every step, because you will be given certain things on the day of your exam that can distort sometimes the way we create value compared to how we say we want to create value, or how we even capture residual value or any other aspect. So then you need to evaluate if we should go ahead with it, whether we shouldn't. So you need to be very familiar with our business model. If you look at E2, from an E2 perspective, the business model can be used for the balance scorecard to identify, in order to meet our business model, what are the financial, the customer base, internal process base, and learning and growth base KPIs we can use to monitor how well we are doing in these avenues. Then you have our strategies. Our current strategies in market penetration? Are we going to go for market development, or are we going to diversify? Then integrated reporting can also come into play, the 6 capitals, how that will be affected with our business model. And realizing the key thing here brought out in your pre-scene, the clear synergy between consultancy and manufacturing. It's a huge strategic asset for us. So maintaining our consultancy well, ensuring quality is absolutely vital. So in our next video, we will discuss the relevant financial analysis.
Okay, so let's talk about the CIMA Management Case Study. First things first, you need to forget everything you think you know about exams. Seriously. This isn't about memorizing a bunch of facts, it's about stepping into a role. And today, we're going to break down exactly what that role is, and more importantly, how you can totally own it. Look, you've done the hard work. You've passed the objective tests. You've absorbed all the theory. But this case study, it asks a completely different question. It's not about what you know, it's about what you can do with what you know. Like on your first day at a new job. So, the real question is, are you ready to hit the ground running? Let's just be crystal clear on this. This is not a test. It's a full-on business simulation. You get all this pre-scene material about a company, right? And on exam day, you're not just walking into some exam hall. No. You're walking through the front doors of that business, you're sitting down at your new desk, and guess what? The problems are already piling up in your inbox. Now you might be wondering, why this format? Well, it's pretty simple. We live in a world that's being totally transformed by AI. Anyone can look up a fact. A machine can crunch numbers. But you know what can't be automated? Those uniquely human skills, like critical judgment, strategic thinking, influencing people. CIMA designed this whole simulation to build those exact skills, making you not just qualified, but genuinely indispensable. So you're not a student anymore, at least not for the purposes of this exam. In this simulation, you've got a brand new identity. So let's meet the professional you're about to become. Welcome aboard. Your new job title is Finance Manager. And what does that mean? Well, you're the critical link. You're the bridge between the boardroom's massive long-term vision and the practical, medium-term plans that actually make it all happen. You're not just reporting on what happened yesterday. You are actively shaping what the company does tomorrow. And hey, don't just take my word for it. This is straight from the horse's mouth. This is CIMA's own job description for you. You're the one who monitors, you implement, and you translate that high-level strategy into real, tangible action. This right here, this is your core mission. And you are definitely not working in a silo. Nope. You are right at the center of this whole professional network. You're working with your own team, sure, but you're also talking to business leaders, partners, suppliers, even customers. This simulation is designed to prove that finance isn't just about spreadsheets, it's about people and influence. All right, so what does a finance manager actually do all day? Well, CIMA breaks your new job down into 5 core activities. Let's take a look at what they are. Think of these as your 5 main missions. These are the key areas where you're going to prove your worth. Every single task, every challenge that gets thrown at you in the exam, it's going to test you on one of these core areas. This isn't just a to-do list. This is basically your roadmap for the entire exam. Let's just zoom in on that first one, evaluating opportunities. So imagine the company's thinking about launching a brand new product. You're not just the person who runs the numbers in the background. No way. You are the strategic advisor who has to look senior management in the eye and tell them if this is a brilliant, game-changing idea or a total disaster waiting to happen. That's the level we're talking about here. Okay, so doing these things is one thing, but how do you actually prove to the examiner that you've got the skills? This is where everything clicks together. This is where your core activities connect directly to what CIMA calls your competencies. This slide shows the magic connection perfectly. So the exam gives you a task, a core activity, like implement a decision from the top. But your answer isn't just about doing the task. It's about showing your skill. You're not just writing an answer. You are actively demonstrating, beyond any doubt, hey, look, I can manage a project effectively. See the difference? Now, this diagram might look a little complex at first glance, but it's really a simple, powerful story about your role. It all starts with raw information. You use your skills to turn that data into valuable insight. Then you use that insight to influence key decisions. And finally, that influence creates a real, tangible impact on the business. That's your journey, from numbers on a page to real-world results. Okay, so we've covered the role, we've covered the tasks, but there's one more piece to this puzzle, and honestly, it might be the most important one of all. It's your mindset. Listen, this is so important. CIMA isn't just testing your technical skills, it's looking at your professional attitude. Having the knowledge is just the price of admission. It gets you in the door. But real success, both in the simulation and in your actual career, comes from applying those skills with the right professional mindset. And these are what CIMA calls your power skills. And trust me, they're not just buzzwords. Professional skepticism means you don't just take information at face value. You question it, you dig deeper. Seeing the big picture means you connect the dots. You see how your part affects the whole company. And communication? It means you can explain really complex ideas in a simple, persuasive way. These are the skills that will make you stand out. So as we start to wrap this up, I want you to remember this one thing. The management case study isn't some final academic hurdle you have to jump over. It's the bridge. It's the bridge that connects everything you've learned in the classroom to your future professional career. It's your big chance to step out of the textbook and into the boardroom. You see, when you really understand your role, when you embrace these core activities, and when you adopt that professional mindset, you're not just preparing to pass an exam anymore. You are preparing to launch your career. So let me ask you one last time. Are you ready to step into the role?
Now, the management case study, you'll be given some pre-scene that's released a few weeks before the real exam, and that will give you background on a particular industry. Now, the idea is you can expect somewhere between 20 and 30 pages there. It will tell you about a particular industry and a particular company within that industry. There will be articles, reports, emails, extracts of financial statements, all kinds of things to get everyone up to the same starting point as they walk into the real exam. Be careful with this pre-scene. It's important to analyze it. It's important to think, what is this telling me? But what you shouldn't do is spend your entire preparation period before the exam analyzing that pre-scene to death and sort of finding out every single possible thing you can about that industry in the real world. Because at the end of the day, you're not expected to be an absolute industry expert in that particular industry. But the purpose of the pre-scene is to give you the industry information you need to set you up for the real exam. Now, most of the tasks that are given to you in the exam actually reflect some new information that's given to you on the day. And pre-scene is very much about the background. Now, yes, you need to understand that pre-scene. And for example, you might need to do some analysis on some of the financial statements that are within it from a point of view of understanding some of the messages within those financial statements, but you don't need to go overboard. We'll talk about this more later on, but the main thrust of your preparation time should be spent practicing questions based on the real pre-scene. But we'll come back to that later on. The management case is split into 4 45-minute sections. Each one is equally weighted score-wise, and each section will have several subtasks within it. So you'll be given some new information, sometimes known as unseen or trigger information, on the day. And then within that information, you'll be asked to do several things. Each subtask can examine more than one syllabus area, and they quite often bridge even different papers. So there could be an element of E and an element of P within a subtask, for example. Now, this next step is important. You can think of this exam as being 4 45-minute exams, because if you finish one section early, you can go on to the next section early, but you cannot bank that time. So if you finish the first section 5 minutes early, all that means is you're going to finish the exam 5 minutes early. So the key message here is there's no point in finishing a section early. If you've got a bit of spare time at the end, use that time to polish up, even if it's just making it look better on the screen, but no point in moving on early at all. You will be asked to reply in a variety of formats, and this reflects the fact that this is a work-based simulation. So it could be, for example, emails, memos, reports, briefing notes. It's useful to know the basic formats of these things. So, for example, with a report, we want to, from, subject, date, brief introduction, main body of the report, and then a conclusion and sign off at the end. But what's very important to note here is the tone of the of your answers. So if you're writing a memo or an email, they are often internally focused, so won't be as formal as a report, for example. And that is your ability to communicate appropriately in the right format is also being tested here, because that's part of your ability to function well in the real world. You're given some word processor type software to use. Practice using that software on the CIMA website. It is a word processor, but it's restricted in terms of its functionality compared to some other word processors you might be used to using. So I would suggest when you are practicing questions, do it as much as you can in the real exam software, and let's say that's available for you to have a play with on the CIMA website. There aren't any detailed calculations in this exam. The detailed calculations are tested as part of the OTs, so you're not likely to be hammering away on your calculator in this exam. It's not to say you won't be working with numbers, but it's more likely that you'll be given some numbers that you need to talk about. So you might be given, for example, an investment appraisal that someone else has prepared. You need to interpret it maybe, talk about the assumptions that have gone into it, talk about the implications and maybe some of the non-financial considerations behind the investment proposal. It's all about interpretation. You will be given tables as standard, so present value, cumulative present value, and normal distribution tables are given to you, but it's very, very rare that in the real exam you will actually need to use them.
Now we are approaching the final part of your MCS pre-scene analysis. So actually this is not the pre-scene analysis, but what we're going to do here is understand practically how you can use your pre-scene and how you need to answer subtask and attempt mocks and prepare for the exam. So first of all, something crucial for you to understand is what will help you pass the exam, what will not help you pass the exam. Now, many students, they fail the exam and they're quite clueless why they fail the exam. They feel like, first of all, they gave theory points, they gave applicable points, or sometimes they even explain things, but yet they fail to pass the exam. So your examiner very clearly states that a weak and a strong answer, that means a weak answer is marked as a level 1 answer, whereas a level 3 answer is an answer that evaluates, gives justification, and uses the pre-scene context. So if you want to pass your exam, you need to learn to not just give theory, just straight from the study text, but you want to give applicable answer points. So you only give applicable answer points that matter, and again, you don't just give the theory, but you apply it to Carton's specific situation. For an example, even if you're using a theory, you don't have to state it very directly. For an example, we'll say you're talking about stakeholder management and you're in your mind using Mendelow's matrix. You can say we can refer to Mendelow's matrix, but you don't have to go on with theory. Say Mendelow's matrix says you have key players. Key players are those with high power, high interest. Instead, you can give a key player. Maybe a key player will be a major shareholder and mention how they have high interest, how they have high power to influence decisions and actions of Cartn. That way you are applying theory, but to Carton's context. You're not just vomiting out theory. Next, sometimes students give good, valid, practical answer points. So this is where you identify the point, but you're not explaining it. So you need to always explain your answer points in at least 3 to 4 lines. So in a brief, paragraph is very important. And always in Carton's context, and your explanation should be commercially sound. So sometimes when we look at a mock, we have answer points that are not commercially sound. They don't make sense in business context. You will not do this in business context. These are things that will not really work in reality. If that's the case, you shouldn't be including it. You only want to include commercially sound points for the applicable situation. You want to discuss specifically what the exam is requiring. So you want to stick close to the examiner's requirement. You don't want to deviate. So you want to answer exactly what is asked, not what you want to answer. And you want to have or write in the voice of a finance manager. So you're not in the operational level, neither are you in the strategic level. So you cannot say we should do this or we should go ahead with this strategy. But as a financial manager, you carry a particular weight in the management level. So therefore, you want to bring this weight out in your answers. And if you are asked to evaluate, you want to always justify your conclusion, give both pros, cons, or argue for both sides. Another important point before we get into the topics I want to discuss with you is always make sure you are writing enough answer points or sufficient answer points that are explained for the subtask weight. So for an example, we say 25 marks per section and you have a weightage of 60%. This will be 25 marks into 60, so that will be 15 marks. So 15 marks will be, we'll say 2 marks per explained answer point. You need to have at least 7 explained answer points. Structure your answer in this way. Similarly, if it's a 40%, you will have to write about 5 answer points. If it's 50%, about 6 answer points. So we'll learn how to train so that you can achieve this level 3 answer. If you can do your best and achieve a level 3 answer, there is no reason why you will fail the exam. Remember, this is a strategy. So as we attempt task mocks, you will learn this strategy, but the key is staying focused and actually putting the work in. Do these mocks, do these tasks. Of course, that's the next step. But now let's move back into context with the pre-scene. So one key area that's highly examinable for you is basically, I would comment on, would be acquisition of a competitor or a supplier. A very probable area in your exam. So your examiner could ask you, what will happen if we maybe acquire Wellbox or any other global rival? What will happen to us? So typical questions might be, first of all, explain how the goodwill will be calculated. So you're not asked to calculate it, but rather you will be given reference material. You need to use it and explain how goodwill will be calculated and the difficulties in doing so. So there are two sub-parts of this subtask. Number one, how goodwill is calculated. Second is difficulties in calculating. So first, mental image on how goodwill is calculated. So you have your fair value of net assets, fair value of consideration. The difference between these two will give you your goodwill. So you need to explain this. One paragraph can be determining the fair value of the net assets. Next paragraph, you explain fair value of consideration. Then you comment on how the difference of this is the goodwill. And you can also, if you want, comment on how you would do annual impairment reviews. Then the second part, difficulty. So what are the practical difficulties in ascertaining goodwill? Your answer will give you a lot of information. It will give you information relating to maybe some of the difficulties. Maybe negotiation of the price is hard. Maybe determining the fair value of the net assets is hard. So you will be given these. Maybe they have certain contingent liabilities which might be hard. So you require a lot of professional judgment, and there is a risk of misstating goodwill. That is what you want to bring out in your answer. Then if you move on to the next question when it comes to acquisitions of a competitor or a supplier is explain the business risk of the acquisition. Now we're going ahead with an acquisition. Now if you just say there is financial risk, there's operational risk, there's strategic risk, I think that's obvious. But you want to go into detail. You want to talk about specific risk. And remember, your unseen, your mock will give you clues as well. You will have reference material that might give you clues. So there are some clues given here. For an example, risk of integrating the business. For an example, if you're acquiring Wellbox, we're talking about integrating another big company. Risk related to impairment of goodwill. We might ascertain the goodwill to be some amount, but we might in reality just be overpaying. Regulatory risk. So if you're talking about combining two of the 6 largest global carton manufacturers, this might be considered an anti-competitive activity. So regulatory risk. If Wellbox's business culture is different, this will be a risk. Many other risks, but you need to explain these in paragraph. You're not just giving the risk. First of all, your risk shouldn't be generic. Second of all, your risk has to be explained. Next, how should the sale and purchase agreement be negotiated? So this is a negotiation-based question. So you want to talk about how we would negotiate. So you want to focus on things like what's our aims of negotiation. You won't just focus on writing step by step. You will talk about why are we negotiating. We'll talk about what is the price we are willing to pay, the max and minimum price. Then we'll talk about the strategy we are going to follow when negotiating based on the value of the negotiation. And then, of course, we will talk a good answer. We'll also bring out points like using good negotiators within Carton to negotiate. So key knowledge points. Number 1, IFRS 3, goodwill. So identifying how to calculate goodwill. Associate accounting, not so common, but yes, you can have questions on it as well. Performance management. So we have KPIs, we have balanced scorecard based. So given that we have 2 divisions, we have both the manufacturing and the consultancy division. These may require different performance measures, different KPIs. So if we use, for an example, the balanced scorecard, from a financial perspective, what are some of the key KPIs we can look at? We can look at our GP margin, ROCE, our return on capital employed. So our KPIs need to meet the SMART criteria. They should always meet the SMART criteria. In specificity, they should be good, they should be specific, They should be measurable. These are the main ones I highlight under these. They should be relevant, of course, and time-bound. I would say relevant and realistic here, and they should be time-bound. If you cannot achieve it within a particular time frame, you cannot measure it, it is very unrealistic and not specific, the whole KPI is gone. So even with our customers, how could we achieve cross-selling synergy? So we can track how many consultancy clients become our packaging customers. Then internal processes, so about, for an example, the CO2 emissions. How can we improve in this regard with targets that keep improving? Learning and growth, how, so here R&D towards single-use material for our cartons come into play here, maybe to make it fully recyclable. Then if you look at our divisional performance, so you look at performance across manufacturing and our consultancy based. So should each division be treated as a profit or an investment center? So it's arguable. So if it's a profit center, they are accountable only for cost and revenue and profits. But if it's an investment center, you're also accountable for investments in addition to the cost and revenue and profits. So depending on how each division can control these elements. So controllability is the key aspect you want to talk about here. If they can control their cost, then they can be a cost center. If they can control their revenue, they can make changes to influence revenue. They can be a cost plus revenue and a profit center. If they also control the investments they make for their center, then they can be an investment center. So it's up to you to decide. There's no correct or wrong answer. The importance is clear, logical explanation in line with what's given to you in your unseen. So we have a few more topics. So from topic 6 to 11, we'll discuss this in the next video.
So that's your Carton pre-scene, unpacked. Now you know the company, you know the 2 topics that cut across the 3 pillars, and you know what the examiner is looking for. But this is just the surface. There are 11 exam topics in total that we discovered, and the real skill is being able to write level 3 answers under timed conditions in the real exam format and with the depth that actually earns marks. That's exactly what our full MCS course at Practices Academy is built to do. We have packages depending on where you are in your preparation, from the complete course with Carton-specific practice tasks and model answers, all the way up to full mocks and written tutor feedback and priority marking. Everything is available right now. No waiting, no drip content. You buy, you access, you start. The link is in the description. And if you found this video useful, please give it a thumbs up. It really helps more MCS students find this content. And if you want free MCS resources throughout the sitting, make sure you subscribe. Good luck, you've got this.